Thanks for joining us, guys. My name is Martin. I'm alongside here with Tanusin. Today we're gonna talk about real estate, specifically recent tax measures the government has enacted to deal with certain topics related to Canadian real estate. So Canadian real estate, always a hot topic. There's always issues talking about affordability, accessibility, consequences of ownership, as well as foreign ownership. So today we're going to address all these recent tax measures that the government has enacted to deal with these things.
The 2-year ban on foreign purchases, so this was initially introduced in 2023 as a 2-year ban. But what the government did was they extended this all the way from 2 years to 4 years. So now it is actually ending in January 1st, 2027. And what this basically means is that foreigners can't buy residential real property here in Canada. So who can't buy properties? This includes non-Canadian citizens and non-permanent residents, and any companies or entities that are controlled by foreigners. So they can't purchase residential real property here in Canada. Now there are exemptions. So one of the exemptions is for students and workers that are working in Canada with a valid permit. And if you violate this law, you face penalties of up to $10,000. And who's liable for this penalty? Well, it's not just the foreign buyer. It could be anyone that knowingly assisted the foreign buyer to buy the property. So that could include their advisors, real estate agents, or lawyers who knowingly helped them buy property here in Canada.
Okay, next up we have something called the UHT. It's known as the Underused Housing Tax, and it's an initiative the government created to discourage non-Canadians from using the Canadian real estate market as a way of investing by just buying up inventory, buying up stock, and just leaving it vacant, waiting for the appreciation to happen, thereby leaving a lot of Canadians without inventory to rent from. So not only is there a 1% tax, there's also something called the UHT return, which is also significant as well, because not filing this return can potentially attract penalties, could be anywhere from $5,000 to $10,000 for not filing a form. It was a little bit confusing when it first came out. Even corporations that didn't have any foreign owners in the corporation were required to file this UHT return. And so it created a lot of administrative paperwork for even Canadians. They've since clarified and made the exemptions more broad. So generally speaking, it's people that are non-residents that generally have to file this UHT return. So with the UHT, it's actually 1% tax based on the value of the property. And the way they establish value is based on two things. It's based on the greater of the property tax assessment or the purchase price. So that's how they calculate the tax every year. Note that this is only just at a federal level. There's also a possibility that this variation could also apply at the municipal level as well. For example, like in Toronto. Okay, so next up on the theme of affordability and accessibility is an initiative the government created called the FHSA. This stands for the First Home Savings Account. And what it allows people to do is take money, deposit in an account, and take a deduction for it when they file their taxes. So it has basically the same effect of an RRSP, where you take money and deposit in the registered account, it grows tax-free. Now the only difference is that it's not really meant for retirement, it's meant to help you buy a home. And so this initiative allows people to drop about $8,000 per year towards the down payment of their first home. The limit is $40,000, so you can't keep contributing $8,000 per year. The most you can contribute up to is $40,000 per year per person. And if you're kind of buying a home in tandem with a significant other, it could be quite significant. It could be up to $80,000 that you can tucked away for this purpose. A couple of significant things to think about is that you have to be 18 years or older to open. But more importantly, this room to contribute doesn't actually start until you actually open up an account, regardless of whether you deposit any money in it. So the takeaway is that it's important for you to open up the account to get the room first, and then later on when you have the funds, then you can deposit it into that account.
The next measure is doubling of the home buyer's tax credit. What this does is it provides a tax credit of $1,500 for first-time home buyers. How the tax credit works is you take $10,000 times 15%, so resulting in a $1,500 tax credit. It used to be $750, so it's been doubled now. The home renovation tax credit. The government introduced this in 2023 to provide a tax credit of up to $7,500. Now this tax credit is available to people that build a secondary unit for relatives who are seniors or adults with disabilities. So you can claim up to $50,000 of renovation expenses. And how the tax credit works is you take $50,000 and you multiply it by 15% to get a $7,500 tax credit.
Increasing RRSP home buyers plan. So this again, continues on theme with affordability and accessibility. If you don't know what the home buyers plan is, basically it's the ability to take money out of your RRSP to contribute to the down payment on the purchase of a home. Now, historically, this was limited to about $35,000. They've since increased the ability to take up to $60,000 out of your RRSP to contribute to the purchase of a home, and this is effective April 16th, 2024. So any withdrawals after that, you can take about $60,000. And it's good news. It allows people to take up an additional $25,000 from the RRSP to help contribute to the purchase of the home. So one additional feature that they've made changes to with regard to the home buyers plan are the repayment terms. So budget 2024, what they did was they extended the home buyers plan repayment grace period by 3 years. Before it was 2 years, meaning that you had to start repaying into the RRSP 2 years after you withdrew. And this additional grace period applies to withdrawals from January 1st, 2022 to December 31st, 2025. And the repayments now start in the 5th year after withdrawal. So as an example, if you withdrew money from your RRSP in 2024, the repayment starts in 2029 as opposed to, under historical rules, 2026. Anti-flipping rule. So this is to deal with investors, specifically investors who buy property, wait for it to grow, and then sell it. So what it does is it treats profits from flipping residential properties for less than 12 months to be fully taxed as regular income, as opposed to the more preferential capital gains. Now, again, people who hold property for less than 365 days and then sell the property, is no longer be taxed at the favorable capital gains rate, which is now taxed using a 2/3 inclusion rate, which we'll explain later on. And it also applies to regular and assignment sales as well. Now, they do have a list of exceptions. It's a very long list of what can get you out of these rules to continue to be taxed as capital gains if you do decide to sell within 365 days. But at the same time, when we look at these rules, it's not always a bad thing to have it taxed as regular income, because there are instances where, if you have a corporation, for example, getting taxed at regular income might actually be more preferential.
GST and HST on assignment sales. So GST and HST now applies on all assignment sales for newly constructed or renovated properties effective May 2022. How the rule works is there's HST now applicable on the amount that you receive for the assignment minus the amount that's attributable to the deposit. Now it's a little confusing, so I'm going to go through an example. So suppose John bought a pre-construction property for $1 million. With a $300,000 deposit. Now let's suppose the home goes up in value from $1 million to $1.5 million. So there's a $500,000 gain on the property. Well, he goes and he assigns this contract to buy the home for $800,000. So $500,000 for the gain, $300,000 for the initial deposit. Well, the HST only applies on the gain part, the $500,000. So now John has to charge HST of $65 on the $500. So instead of receiving $800, he's going to receive $865 and remit the $65 to the CRA as an HST payment. cracking down on short-term rentals. So as of January 1st, 2024, income tax deductions will not be allowed on short-term rentals. Now, it only applies if the short-term rentals do not comply with provincial or municipal laws. New tax on vacant lands to incentivize construction. So the government is trying to do consultations this year to free up perhaps land that has been sitting there and not being constructed or just vacant, and getting them into the construction market. So nothing has been released just yet, but the government is working on perhaps doing some consultations this year. More CRA audits for real estate. So the government is increasing their audits on real estate transactions. The government is committing up to $73.1 million over the next 5 years to the CRA. So we're going to expect more real estate transactions to be scrutinized by the CRA. Capital gains tax increase. While this isn't directly related to real estate, but real estate is a big industry here in Canada, and there are a lot of real estate transactions, so it only makes sense to go through it. So what's changing? The first thing is that, if you recall, capital gains gets included in income at a rate of 1/2. That rate of 1/2 is increasing to 2/3. Now, individuals get an exemption. So they get an allowance for the first $250,000 of capital gain. The first $250,000 of capital gains gets included in income at 1/2 rather than 2/3. Now, this exemption doesn't apply, or this allowance doesn't apply to corporations or certain trusts. It only applies to individuals. Now, we're going to do a full-blown video on the capital gains rate increase, and one thing to note is that it's still under draft legislation, and nothing is final just yet, so there's more and more developments coming as we speak. So we're going to do a full-blown video on that coming soon.
Well, awesome. Thanks guys for listening in. Hope you found this informative. If you do, we actually have in-person seminars as well. That's a little bit more detailed, a little bit more focused on a specific topic. We actually have one coming up September 17th, 2024, and this is going to be held in the Kitchener-Waterloo region. We do have seminars all over Canada, but primarily we will be hosting the majority of it in Toronto and the KW area. The next presentation will be related to tax strategies for building wealth for real estate professionals, and it's geared towards, as the title mentioned, real estate professionals. So hope you can make it out. We kind of keep our events a little bit intimate, to 40 people or less. If you don't make it out to this one, we'll have one in the future as well on a particular topic. So again, thanks guys. Look forward to seeing you, if not the 17th, somewhere down the line.